Oh man, so Bitcoin is down 2%, breaking as we speak through a critical level. We've got Ethereum down 6% here. What is going on? What's going on in the market? We need to go live right now. It's the early hours here in Austin on a Saturday morning, but it's important to give you guys the update because as you can see on this chart right here, Bitcoin is breaking down from the key level, which we didn't think it was going to break through, and we got away with it on Friday. But as you can see here, markets are now pushing us down through the bottom of this channel, which is 28,650. Now, what is the significance of this? Well, the significance is we've not been able to lose the bottom of this channel. We've had a couple of fake outs here. Let's go back. You can see this being the main fake out we had here. So we need to watch out for a fake out. But remember, if we fall through this level, our price target from a technical perspective would be at the bottom of the wedge, which worst case scenario brings us to 26,200 range here at the bottom of the wedge. Okay. If we continue to fall, remember the wick from the lunar wick brings you down to 25,300. So we need to now get prepared for lower price targets. But we don't also want to jump to massive conclusions just yet. At the same time, I need to show you this because this is ridiculous as well. You've got Ethereum literally plummeting right now, 1,500 on Ethereum now. You're back in the 1,500 range. It feels like a long way ago that Ethereum was at 4,000. What is going on here? For those who aren't familiar, there's a whole worry going on right now in terms of ETH and staked ETH. So check this out. DeFi contagion. Is there risk of DeFi contagion? Analysts warn of staked Ether depegging from Ethereum by 50%. Could this be the next Luna, right? Crazy to think that Ethereum is starting to give you some of these vibes and people are really getting spooked now. Before when the average crypto trader wasn't too aware about these depegging and pegging and the differences between different stable coins. They're starting to get a lot more clued on now, and that is leading to certain selling behavior. But the problem with selling behavior is you can get a run on some of these stable coins. So in this particular situation, you've got staked ETH, which is being, let's read it all out to you so you guys can see. Notably, the staked ETH peg could drop against ETH by 50% in the coming weeks, raising the risk of a DeFi contagion as Ethereum moves from proof of stake from proof of work. Over 1 million Ether in liability risks default. And they use the example here, right? If customers start withdrawing from Celsius, which is one of your yield type aggregators, they will have to sell their staked ETH. Celsius has liabilities of 1 million ETH. So 288k of that is inaccessible until the merge. They can't touch it. 30k are lost, 445k are in staked ETH, and 268k only are liquid. So this could cause a run because you're under collateralized. Is anybody seeing a pattern here? Same patterns, same behavior is going to get people to get wrecked. And this is why when we spoke about the regulation last week, you've got to admit that some of these things are really important. If you're going to have these types of stable coins which are pegging to something else, you've got to be at least 100% collateralized. And I'd even argue you should go above and beyond and be over collateralized, which is really important. Now you can just imagine what would happen if this happened to Ethereum, right? The biggest platform by DeFi locked, the biggest platform in terms of being contagion fears. This is not great, and that is why you're seeing Ethereum fall today at 6%. But let's remind ourselves what's going on with the wider market. We covered off yesterday the fact that we had the inflation woes, right? The inflation came in, and you can see the blue line here. We inflected back up again despite interest rate hikes and really worrying the economy now, and the crypto market say, oh, is inflation out of control? That's the question, right? Is inflation now out of control? And that's a worrying sign. You've got the FOMC meeting next week. We're going to cover that on this channel, so make sure you've hit up the like button, make sure you've subscribed, because that FOMC meeting is going to be critical now. Is he just going to come out with another 0.5 basis point hike and say, calm down guys, we've got this, it's just a lag, it's going to come through, don't worry? Or is he going to go, you know what, I don't want them to risk saying I never did anything, I'm going to go 0.75 basis points or one whole percentage point, say there you go, full whack, do what you want, plunge yourself into recession. At least you can't say me, Jerome Powell, didn't do anything to fight inflation. I did it. What else do you want me to do, right? So this is going to be important. The words he uses will be important, which is why we need to cover it here on this channel, because that can move the markets, as you guys fully well know. Now, at the same time, when this was happening, you get Treasury yields flying to over 3.165% here. So you can see here on the chart, that took a massive increase here on back up again, spiking back up again. Now, the issue with the Treasury yields going up is you got to understand, what does this mean? It means you can get a risk-free 3.165% by leaving your money in government bonds, right? So what it means is riskier plays, such as your growth stocks, such as crypto specifically, become less desirable for you to take such risk to get little reward or even loss in this instance, right? So it makes it really hard, and you get this risk-off mindset where people shift to the safety assets such as bonds, which makes it less desirable to hold risky growth stocks or crypto, and definitely altcoins, right? So you're seeing that start to happen now as well. So definitely something for us to watch out on. Speaking of which, guys, make sure you get yourself set up on BYBIT. Link's going to be in the description for you to join their World Series of Trading, guys. This is going to be super exciting. I've entered our own team, so you guys can use my link in the description. Our team will enter this World Series of Trading, and you can win a prize pool of 8,000 USDT, which the winning team is going to split. So it's a team effort, and if the team wins and you're part of that team, you're going to get a percentage of that. You also get a few other benefits. Do head over to the website to check it out. But also, more importantly, is you're going to get 20% off of your trading fees whilst you're in this competition. Let me just find that bit for you. There you go. 20% trading fee discounts on any trades during this competition. So if you're trading anyway, trade within the competition, and you'll get 20% off using my link in the description to get yourself set up. So do consider checking out the BYBIT World Series of Trading. Super exciting. But speaking of a World Series of Trading, markets are not in a fun position right now. So for me right now, what am I doing? I'm waiting for this decision right now. The interesting thing is it's weekend, okay? And we've noticed patterns with weekend that normally what happened was Bitcoin was able to rally on the weekends. Now, the reason Bitcoin was able to rally on the weekends was the equity markets weren't there to push it down or give it direction to say, oh, go down, we're red, you should be red too. And we had that correlation. But what you're noticing now is Bitcoin already knows what the equity market's going to do Monday, Tuesday. So it can just start doing it now, which is why Bitcoin is falling. You've also got the ETH drama with staked Ethereum causing a lot of stress, right, guys? Don't underestimate how big this could be in terms of a worry point. Because if there is a bank run on the staked ETH, this could be a huge liquidity issue. And obviously, that's really going to damage Bitcoin more than Luna did. And we saw what Luna did to Bitcoin. So this is a really precarious position. But we still, from a technical perspective, I've got to tell you guys, we've got to be prepared for the bounce to the upside as well. Because we've seen it so many times. So it'd be irresponsible for me to say we couldn't channel back up. We could, because we've seen that happen in this channel many times. Most notably here with this fake out running us then all the way back up, which would have been a lovely trade to take up there. So if you guys want to check out BYBIT, links in the description, get yourself signed up, win up to $4,000 in bonuses. If you see a bounce here, which is starting to come back in this direction, you could trade that back up the channel. Okay, but most likely right now it looks like we're going to try head down, and if we're heading down, I personally don't short, but you will be looking at price targets heading towards pivot point 3, because pivot point 2 is the one we're going to lose, which is about here, and then you really start heading down towards these uglier price targets around 26,300. So those are the kind of numbers we'd want to be looking at. Obviously, you're going to want to tie that in with what's going on in the macroeconomy, which isn't great right now, so it backs that thesis of heading towards the downside. I can't see anything positive to come out of the FOMC meeting. What can he possibly do now, right? He's going to have to rate hike hard. 0.5 is guaranteed. If anything, it's 0.75 or 1, and maybe more stricter tonality from Jerome Powell. So is the market just going to dump that in now and therefore just go a bit more red/sideways when he's speaking? That's what we're going to have to watch out for early next week. Guys, make sure you smash up the like button and subscribe if you appreciate these updates regardless of where I am. Make sure you let me know what type of content you want to see, and if you appreciate this type of content, hit up the likes. Don't forget to subscribe. Watch this playlist here of other videos you can watch, and I'll see you in the next one.